Hello traders, welcome back to my channel. Today I've decided to show you guys my scalping strategy before I actually trade, because I've noticed that I find it a bit difficult to actually explain my strategy before I trade, and a few people in the comments say I don't know how to explain it properly. So yeah, hopefully this video will clear up my strategy. And over here I've got these cute plants, and I've got this one and the bamboo ones. The leaves on the floor because I was cutting the leaves. But yeah, right now I'm off in. So yeah, let's get straight into it. Okay guys, so right now I've just opened TradingView and I've opened the US 100 index just to explain to you how, if I was to trade this trade, how I would trade it. And my strategy is very simple. It's not complex. Literally, it's just support and resistance, and I literally have a second confluence, which is the moving average, which is this blue line and red line over here. Let me just put it on the daily just so we can set ourselves up. Okay. So let me just remove this. Okay, so essentially all I use is support and resistance, and I have a second confluence, which is a moving averages. Some people who use support and resistance don't use moving averages, and some people who use a second confluence don't use a moving averages, but they use a trend line. So it's up to you which one you want to pick. You can either choose a trend line or a moving averages. Personally, I prefer using a moving average. It's up to you what you want to pick. You can either just trade with support and resistance, or you can have a second confluence, which is either your moving average or trend line. So now we've got that sorted. Let's get straight into it. So first, before I trade, I like to do what you call a mini analysis. So essentially what we're going to do is look on the daily time frame, because we want to know what the overall market trend is. There are two ways the market can go. It can either go up or it can go down, right? If it goes up, we call that bullish, and if it goes down, we call that bearish, okay? Very simple, straightforward. So now I'm on the daily time frame. So if we use our eyes visually, we can see the direction the market is going is an uptrend. And for those who can't figure it out visually, that's where either a trend line comes in or a moving average comes in. So when you look on the moving average, my candlestick is above my moving average. So it's above the, as you can see over here, it is above my blue line and it is above my red line. So essentially this shows that it is in an uptrend. Now if the candlesticks were below my moving average, both my blue line and red line, then it shows that it's a downtrend. But for now we can tell that it is in an uptrend. And also my second confirmation is this cross over here. My blue line crossed my red line. So let me just demonstrate that to you. So my red line is my long-term EMA and my blue line is my short-term EMA. Because my blue line crossed over my long-term EMA, that is essentially called a golden cross, and a golden cross shows that the market is in an uptrend direction. However, you should not fully rely on a moving average, especially on a short-term time frame. But for now, you can see this is a daily time frame, so that confirms that the market is in an uptrend. Okay, hope that makes sense. So number one, we look on the daily time frame. We want to figure out what the market is saying. And the market right now is saying that the market is in an uptrend, that the market structure is in an uptrend. Okay. Now, once we figure that out, we want to look on the hourly, as we are scalpers and not swing traders. So now if we look on the hourly, we can tell that it is also an uptrend, as the candlesticks are above both my EMAs. Okay, so now we figured out that on the short-term time frame that the market is trying to go up. So what we do right now is we want to draw our support levels. So I'm not going to get into how I'm going to draw support and resistance. I've literally done a whole video on that, so you can check that out. I will link that down below, but I will explain my support and resistance briefly. So right now we are going to draw our support level. So I can find a support level over here. I can find another one over here. I can find one here. I can find one also over here. And then over here too. However, that's just going to clutter our space. We just want to find the most recent support level. And then of course, if the price does go down, we can just redraw our support level. So right now I'm just going to remove these. Okay, so for now, I can see that this is my support level. And how was that my support level? As you can see, it touched. Oh, it's done a little weird thing over here. And it touched, and it touched, and it touched. So therefore, this is our support level. And over here, it touched over here, and it touched over here, which is, so you can call it the swing low. Some people prefer to using the term swing low. I just call it touches. Sorry, it was not a swing low, sorry, a higher low. This was our higher low over here. And then it created a new higher low over here. So essentially this is our support level. So yeah, that is my support level. I could also draw one over here too. Like right next to my EMA. Which When your support level is next to your EMA, that is called a dynamic support and resistance level. So yeah, on the hourly, I've literally just drawn my support level. And now we go on the 30 minutes. You can skip the 30 minutes and just go straight into the 15 minutes. But just for this video, I just want to show you how 30 minutes look. So the 30 minutes also confirms our support and resistance. Look, it touched once, 2 and 3 times. And then I went up and created a new support level. So essentially, we don't really need this support level right now. Let me just remove it. And then over here, it touched once, twice. Maybe I should just draw it. So it touched once, twice, went back up, went back down, touched again, went back up, went back down, touched again, went back up, and went back down. And then this essentially was our previous resistance. And now it is our new support level because it touched, went down, then touched, went back up. So essentially, this could touch back here and then go back up, or it could break down. Or essentially it could break down and go up, or it could just break down and pull back even harder and trace down all over here, which is when we change our positioning and we could sell. But usually when there is an uptrend, I don't like to do the opposite. I just want to stick to a buy position. If it sells, I'm just going to leave it. Okay. Now let's remove these dusty drawings. Beep, 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 beep. Bear with me, guys. So now we looked on the 30-minute time frames, we go on the 15, but as I said, you can literally just do hourly, 15 minutes, then 10 minutes. Okay, so now we look on the 15 minutes. If we need to adjust, we can adjust, but I know, so I forgot to mention, when you draw your support level, you can also draw it in a rectangular frame. So you can literally draw it in a rectangle. Some people prefer rectangles just so they can have a visual cue of their support level. And your support level could be this whole area. However, visually, I already know that it will be this area. So I just prefer to have a single line. Sometimes I do use a rectangle, but for now, I just like to have a clean setup with a singular line. So this is, so essentially your area, your support level is not just one level. You can basically class it as your area, as it's not just, your support level is not just 25041. It could also be 25063, okay? So just keep that in mind. Essentially the market won't always touch that level. It could touch near that level. Okay, hope that made sense. So yeah, right now we're on the 15-minute time frame, as we mentioned. So look, this literally, I can adjust it over here. So essentially what we just did is, just to reiterate so you don't forget, number one, we looked at the overall time frame. Number two, figure out the market, to figure out the market direction, right? And number two, we looked on the hourly and it confirmed our market direction. And number three, on the hourly, we drew our support and resistance. You look either on the 30 minutes or just go straight into the 15 minutes, adjust, 10 minutes, adjust, okay? And then number five, we'll get into number five in a bit. Okay, so now we are going to go on to the 10-minute time frame. Before we go into the 10-minute time frame, I just want you to look at the candlesticks and see what's going on. So we have a big candlestick over here. So now we go on to the 10-minute time frames. Okay guys, so essentially I haven't paid for my trading view, so we cannot use the 10-minute time frame. So I'm just going to explain it over here and then you can see it in my live trade. So then essentially we go on the 10-minute time frames and just adjust our support level. And then usually I would draw my target line, so my resistance level, resistance where I would like to take profit. And then I would essentially just wait for price action and I will enter either on the 10-minute time frame or the 5-minute time frame. And that's essentially it. So maybe let me just write it down in case you guys are writing notes. Let me reiterate what we just did. So number one, we looked at the overall time frame to figure out the market direction. Number two, we looked on the hourly and it confirmed our market direction that it is an uptrend, and we used our moving average for that. And then number three, on the hourly time frame, we also drawed.
And then number three, continue from that.
And then the third point is that on the hourly, after we figure out the market direction, we draw our support and resistance line. But for now, we draw our support line as we are trying to buy. And essentially, always remember your support level always has to be below the price and your resistance level is always going to be above the price. And then fourth point is that I will go on the 15-minute time frame. You can go do 30-minute, 15 minutes, but then it just overloads your brain. So just literally just go on the hourly and then 15-minute time frame, 10 and then 5. So then you just go on 15-minute time frame, adjust. then just bear in mind if there's any patterns that you might see or candlesticks like a hammer, bullish engulfing, or whatever you see that could confirm your entry point. And then you use the 10-minute time frame to enter your trade, and then you use price action to enter. So literally it's support and resistance, you have a second confluence, and then third is using price action. It's very simple. I know it's easier said than done because usually when you trade, your emotions take control of you, but it's literally as simple as is. And I'm not going to sugarcoat it. You're not always going to make a profit when doing the strategy. Of course, you're going to lose because your emotions and greed come into control. And also, let me add, so I just want to give you a little tip. Sometimes when there is an uptrend and you drew your support and you drew your support level and you're like, yeah, it's going to go up, and it just goes back down. That's because there's something called a liquidity sweep. So be careful of a liquidity sweep, as I literally made a loss. I actually made a big L when I did this because I didn't know there was such thing as a liquidity sweep. So yeah, do your research on liquidity sweep before you enter your trades on support level. Essentially, to figure out there is a liquidity sweep, let me see if I can show you here. So essentially, I got stopped out over here on the 7th of October, but you can see, look, they are very long wicks. And then if you go back a bit, long wicks too. So these are long wicks, and when there are long wicks on your support, that is a liquidity sweep, and you should be aware that it could go against you, okay? Yes, support and resistance can be correct, but just be aware that you know what's going on in the market, and you're aware of candlesticks, price action, etc. So that is my tip for you when you trade. So yeah, that's essentially it. It's literally simple. You're using support and resistance, and I literally have a second confluence, which is moving averages. Like I mentioned, you can use trend line, up to you. So yeah, I'm gonna get into my live trade. You're probably wondering the price is gonna be different on my live trade, as I filmed my live trade before filming this. So yeah, let's get straight into the live trade. Hey guys, so remember what we said earlier, we look on the daily time frame. So on the daily time frame, we know that it is in an uptrend, as you can see visually and proven by my second confluence, which is my moving average. So daily uptrend. Okay, so on the daily, we can tell that it is overall bullish and proven by my moving average. Okay, now let's go on to the hourly. We don't want to spend too much time on the daily. So on the hourly, I actually drew my support line earlier. So I'm just going to draw my second support line over here. There we go. So look, it touched. And then I'm actually going to draw my resistant level now, as this resistant level could be our new support if it doesn't pull back. So yeah, let's just put our resistant level just over here. Okay, and if you zoom out clearly, you can tell that there is an uptrend. So now that we've done the hourly, we're going to go into the 15-minute time frame. We can skip the 30-minute time frame. Okay, I'm just going to quickly remove my support because it's making the graph very clustered. And we can tell over here that there was a pullback, and then it's trying to go back up again. So look, you can see that there was long wicks over here, which was the liquidity sweep. But now currently there is no long wicks like that. So I don't think there will be a liquidity sweep again. So I feel like it wants to touch the resistance, and it could go up or it could go down. I'm just going to quickly go on the 10-minute time frame. But now I can see that there is buying pressure. And look, also on the 10-minute, we can tell that there was a pullback, and now it's trying to recover again back up and test the new resistance. So yeah, I'm just gonna wait for a confirmation because I'm not sure if it touches and then it pulls back again. So let's just see what we were gonna do. And then look, this whole area essentially is my support area, and it's essentially above my support area right now. So could this be the new support? Let me just quickly change this to green. So yeah, look, there is a high buying momentum and sellers aren't in control. Buyers are in control right now, and it's proven by the price. So let me quickly go on the 5-minute time frame just to see what the 5-minute time frame is doing. So yeah, look, green, there's a strong buying momentum. If I looked onto this trade earlier, I could have bought over here and just sold just over here. But I wasn't trading at that time, and we're trading now, so we can't dwell on that. I quickly go on the 10-minute time frame and figure out what we're gonna do. Okay, I'm just gonna wait. I might skip this video and just edit and fast forward it to show you my entry if I enter. or if I'm going to avoid this trade. So let's see. But so far we know it's going in an uptrend and it wants to go up. So we're just waiting for that confirmation. So whilst we're waiting, remember how we said, number one, I look on the daily time frame. Just to reiterate, I look on the daily time frame, then I look on the 30 minutes or just go straight into the 15 minutes, adjust my support and resistance level, and then adjust it again on the 10 minutes if it needs adjusting. And then we want to enter, and then we use the 5 to 10 minute time frame to figure out if we're going to buy or sell, and just in case the price action decides to go opposite our intended direction. And then when I enter, I just want a quick 10 to 20 points, and that's literally it. Okay guys, I'm gonna buy because it wants to go up. Yep, and I bought. Okay. Thing is, I should have waited for my support level, but I didn't. But as a beginner, you should. But for now, I know that it's going to go up. I know all of us as traders like, oh yeah, we're gonna go up and it goes against us. But yeah, from the price action, we can tell that it wants to go up. And my resistance is going to be our new support level. But right now, we're down. So hopefully I'm not wrong. But yeah, I entered because I know it's going to go up. Look. Strong momentum. It wants to go up. Look, sellers trying to get in control. Buyers got in control. Sellers again. But buyers are in control, sellers are not in control, right? It's the buyers, and look, you can see it's pushing up, but it's just testing and going back. And I quickly have a pineapple because I'm hungry. Guys, I think I'm gonna skip this until I actually make my trade. So yeah, I entered 25039. I literally just want to make 10 points, and literally that's it. Okay guys, I'm back. But look guys, it's pushing up. I feel like I'm going to take my profits soon because I'm very risk averse. Especially when money comes involved, I become a pussy. And I've noticed this about myself. Sometimes I take less than 10 points and then it just keeps going higher and higher because of my emotions. But at the same time, it's better to stay risk averse than being sorry. Okay guys, I'm going to close soon. I'm just going to take 10 points and I'm out, okay? Yep, okay, I'm out. That is $100. Oh look, it's going up. Guys, it went up and I could have made more. I could have at least made $200. But with me, but the thing is, look, I could have made more, guys. I could have made more. I'm so annoyed with myself, but it's okay. Like, I could have made more, but my emotions got the best of me. And you know what, it's better to stay risk averse than being sorry, you know? Like, this is bothering me right now, guys, because it's going up and I could have made more, but okay, it happens. It's better to stay risk averse than being greedy, because if you're greedy, you're going to lose more, right? So it's better to stay risk averse, take some points, go out. If you want later on, go back in. But I feel like when you make a profit, just take that profit and then move on your day, right? You can take 2 trades, but I feel like 100, I might enter again later, but I feel like it's fine. $100 is okay for me. But yeah, I feel like my goal next time is to at least trust into my strategy and try to take like 15-20 points rather than 10 points and getting scared. And like, anyways, that's enough about me. So guys, remember, I'm gonna reiterate, I think I've said this like 3-4 times now. So look on the daily time frames, figure out the overall market direction. But we're scalpers, remember, so we want to look at the short-term time frame, but it's good to know the overall direction, just in case that the short-term time frame is a pullback when the actual market is supposed to be an uptrend. And then you're going to have your second confluence. That you could have your second confluence, you don't have to have your second confluence, just to confirm whether it's an uptrend or a downtrend. Now, number 2, we look on the hourly, we figure out the short-term time frames momentum. So what we did here, we figure out that it was in an uptrend, and we used our MA to figure that out, or you can draw a trend line, up to you, or just use your eyes. And then you're going to draw your support and resistance on your hourly, and then start going down the time frame and adjusting your support and resistance. So we go on the hourly. You can either decide to use the 30 minutes or just skip it and just go straight into the 15 minutes. And then you're going to use the 10-minute time frame. And then, yeah, you're going to use the 10-minute time frame. And then you're going to look onto the 15-minute. I don't think I mentioned this. I think I forgot to mention this. But on the 15-minute time frame, you sometimes use it for clarification of when you want to enter. And then you use the 10 to 5 minutes to actually enter. So let's say on the 15-minute time frame, it's like a strong big candle. And then you get that confirmation on the 10-minute time frame by having a bullish engulfing or a hammer or any patterns that you know that is bullish. And then you use that to enter your trade. And then you draw your target level, you enter the trade, free price action, like I said, the pattern or the candlestick. And then, yeah, that's literally it. And that's the strategy done. I know it sounds simple and it's harder when your money is on the line, which is why I recommend doing demo first and then go on and actually trade real money. And I feel like a tip, if you notice that you're blowing your account in real money, go back to demo. And I feel like with demo, you're more likely to overtrade because it's not real money, right? You're like, oh, it's okay, I can risk that position. But when it's real money, you don't want to risk that position, right? So yeah, I feel like you should go back and forth with demo as well as real accounts. So yeah, that's literally it. I hope that made sense. If it doesn't make sense, let me know. And yeah, but yeah, hopefully this video helped. I'm just gonna quickly film an outro. And yeah, that's the video done. Don't forget to smash that like button and hit that subscribe button if you enjoyed these type of videos. And also, I wouldn't mind for you guys to suggest any more videos that you would like me to do, any more explaining I should do, any feedback. I will take them in and implement them in my videos. If I need to explain them more and it's not so beginner friendly, let me know so I can redo these more of these videos and try to explain it in more easier terms. So yeah, take care and happy trading.